Thank you for joining this Fifth Era webinar. This is a little bit different from most of the ones we hold. Today, we're launching our new book, The Intelligent Investor Silicon Valley. And the purpose of the next 30 minutes or so is to give you an overview of why we created this book, what you can expect from it, and why we think it's a good addition to every entrepreneur and every early stage technology investor's bookshelf. Let me also say we have a couple of the contributors listening in on this call. So let me begin by thanking them. And in fact, all of the 55 leading Silicon Valley angels, venture capitalists, incubator, accelerator, and other providers who have participated in this project. We very much appreciate all of their wisdom and insight. And we think the book represents a veritable hydrant of information, a fire hydrant of information, as I'll explain in the next few minutes. Let's begin by talking about the context of this book. I think everyone who is listening in on this webinar knows very well that we are living in a time of unprecedented innovation. Around the world, almost everything that we do is changing in front of us. And every industry, every country, everything that humans participate in, entertainment and education and health, all of these things are being dramatically changed. Whether we're talking about the rise of a true connected digital economy on the left, whether we're talking about the enormous strides in life sciences in the middle, or whether we're talking about the need for and the emergence of clean energy sources and supply. All of this innovation and many other innovations too are compounding in this time frame. It's a time frame that Alice and I have written about in the past. We call it the Fifth Era, the industrial period that we've lived in for the last 200 years was the fourth era of civilization. And we don't yet know exactly what the future holds, of course, but we do know that it's going to be dramatically different from the industrial era of the past. This is also a time of unprecedented wealth and value creation. And we've talked at length about this on our other webinars, but let me just give you some evidence for this dramatic shift of wealth. The most obvious place to look is in the public markets. And here, the last 10 years, we have seen the emergence of the world's most valuable companies by market capitalization, all or mostly being disruptive technology companies. This updated in the last couple of days shows that of the top 10 most valuable companies globally, the vast majority of them are innovation and technology focused. And in the top 30, more than half are today. This is a dramatic shift. If we went back 10 and 15 years ago, the list would have been dominated by large energy companies, utilities of all sorts, banks, and a few consumer and retail companies. Some of those are still on the list for sure, the Walmarts and the Johnson & Johnsons of the world, but even their businesses are being dramatically transformed as they embrace new technologies. This is important not only because these are very profitable companies, but also because the world's investors are voting that these companies will grow faster than the industrial era companies that have still to embrace new technologies. Well, of course, the public markets are just part of the story. Indeed, the majority of the value being created by disruptive technology companies is being captured in the private markets. And these are 25-year returns for different asset classes based upon government and Cambridge Associates and other data sources. We can see that fixed income earns 3 or 4% per year over those 25 years. The public markets, which I referred to on the last page, the S&P 500 and the NASDAQ Composite are averaging 10 or 11%. And then we have the venture indices from Cambridge Associates in blue. The average per year net over the last 25 years was 24%, but that hides an important aspect of early stage investing. because that average is pulled down by a late stage return of 12%, which is very much like the public market return. This is the world of SoftBanks investing billions of dollars into the WeWorks and Ubers of the world. But at the other extreme, early stage technology is perhaps the highest performing asset class in the world. And over this time frame, Cambridge Associates in the US reports a 32% net return. Of course, there is a big distribution around that, with the top quartile firms earning much more. Why is this important? Because the reality is most investors and most of us have most of our assets in fixed income, public equities, and perhaps some real estate. And very few people in the world participate in early stage technology. Now, all of the people that participated in this project and in this book are leading investors and very active in Silicon Valley early stage technology. And it was our feeling that it made sense to get their wisdom and put it into a single book. Why? Well, back at business school, back at Stanford in the last century, we learned at the feet of Benjamin Graham. Benjamin Graham was an author that wrote The Intelligent Investor. And even today, 70 years after Benjamin Graham wrote this book, it continues to be one of the best-selling and perhaps the best-selling book on investing in the world. The problem is, it's an old book. It was written in 1949, 70 years ago, and Benjamin Graham conducted an empirical evaluation of investing and investing returns at that time. The book is 600 pages long, and it turns out there's only one page in this book on technology investing. That page is at the back of Appendix 7. And Benjamin Graham, empirically analyzing in 1949 technology returns, concludes that with the exception of IBM, it's not a very good space to invest in. Well, that almost certainly did make sense in 1949. But as I've just shown you from the prior two pages, it makes no sense today. It makes no sense that the top selling book on investing, the book that created intrinsic valuation and value-based investing, this book completely avoids the topic of technology investing. Now, things have changed. And today, as I've shown you, the world's most valuable investments and the highest returning assets in the world are technology stocks. So Alice and I, thinking about this, ruminating on this, decided that perhaps it made sense to create a complement to this book. Fantastic as this book is, we felt that it needed a complement. But before we just launched in, we took evaluation of other books on angel and venture capital investing, and there are a lot. These are 8 examples. These are amongst the highest ranked books on Amazon on the topic of early stage technology investing, and there's a lot of wisdom in these books. We read them all, and what we concluded is that what the world doesn't need is one more book where a single author provides their perspective on early stage technology investing. Now, that these books do also come with some limitations. Many of them are written by people who are not, in fact, investors. Many of these books are written by academics and researchers. And many of these books tell you more about the quantitative side of early stage investing. And as I'll show you in a moment, it's the qualitative side of technology investing where the secret sauce almost certainly lies. So anyhow, Alice and I decided that we didn't want to be 2 additional voices in this space. But what we did want to do was to reflect the essence of Silicon Valley. We've lived here for most of our working careers, 35 years now. And in that time, we've got to know a lot of people in this very remarkable part of the world. We've served some of the world's largest and most successful companies, being consultants to Google and Microsoft and Cisco and eBay and others. We've been early stage technology investors ourselves for more than 20 years. And we've sat on the boards of companies, Alison today sitting on Silicon Valley Bank here in the Bay Area, and myself with SFox and Securitize. So we wanted to try and capture the specialness of Silicon Valley. Now, this isn't to say that Silicon Valley is unique. In fact, far from it. There are great hubs for digital innovation on every continent of the world. And there's great entrepreneurs being backed by great investors around the world. However, Silicon Valley is still a little bit special. A disproportionate share of the world's technology innovations come from this part of the world, and certainly a very disproportionate share of the most valuable companies in the world are based here. So we decided to focus on what we know best, which is Silicon Valley, but we decided that it wouldn't be our voices. What we decided instead was to take or issue an invitation to 50 or more of the most remarkable people we know, people who have spent their lives, or at least the latter portion of their lives, in this arena, in early stage investing in Silicon Valley. Now, I think many of you are familiar with that adage that oftentimes business books have maybe a chapter of content in them, and then they have a lot of filler. Oftentimes we read a business book and we conclude at the end of 40 or 50,000 words that probably one chapter would have sufficed. Well, we wanted to go even further. We wanted to have people, each one of whom would be worthy of a book, condensed their thinking down to 3 or 4 pages each. And the mechanism we used to do that was we asked them 20 questions that cover the gamut of early stage technology investing. Why do you do it? What do you gain from it? Why do you find it exciting? What are some examples of where you've succeeded? What are some examples of where you have failed? What are the best practices? What do you believe are the traits of a great early stage investor? What do you think are the traits of a great early stage technology entrepreneur? And if you could give them just one piece of advice, what would it be? And we asked other questions too, 20 of them. And then we only gave them 3 or 4 pages each to condense all of their wisdom. So we think we have 50 or more books worth of wisdom in this one book, The Intelligent Investor, Silicon Valley. A little bit more on the contributors. They are all or have all been Silicon Valley investors and early stage technology participants. Most of them are venture capitalists or angel investors from top VC funds or top angel investment groups. Just over a third of them are female, and about a quarter of them come from diverse ethnic backgrounds. We chose to be a very diverse book and a community of diverse voices. And one of the things you'll experience as you read this book is, of course, that many people have overlapping, but also at times different points of view about these topics. And we think that that wealth and diversity of opinions is extremely important. There isn't just one way to succeed in early stage technology, or indeed in any other part of the world of business. And we wanted our readers to be exposed to competing points of view. Whilst we did edit the perspectives, we didn't change the words. We spent a lot of time on this. Should we edit the voices of these 50 remarkable people? And we decided not to. So you get to hear directly from them what they want to tell and share with you in their own voices. And it's exciting and interesting to be able to to hear from them directly. The analogy that someone gave to us recently was that if you could be on your front porch one evening and you wanted to be taught about early stage technology, who would you want to have come and sit with you and give you their wisdom? Multiply that by 55, that's what this book is about. So I thought I'd share a little bit of the content. As I've mentioned already, there's a diversity of views, and we think it's a little dangerous to try and simplify so much content down to a few themes. But what I've done in the next 2 pages is I picked 2 questions. This question is what makes a great early stage technology investor, and the next page is what makes a great entrepreneur. And these are the top most mentioned themes. We could spend a lot of time on this. I don't plan to do it today. I think that if you read the book, you'll have your own takeaways. But for Alison and I, what came through loudly was that early stage technology investing is not just a quantitative, disciplined way of investing. Whilst The Intelligent Investor by Benjamin Graham is ultimately a mathematical, quantitative approach to making investment decisions, in early stage technology, it skews much more towards the qualitative, soft, and human dimension. And indeed, all of the remarkable people in this book emphasize that point. You need, if you're going to enter and be an investor in this space, to be collaborative, relationship-oriented. You've got to be able to build trust with other investors as well as entrepreneurs. It's the only way you'll get exposed to the best deals. You can't be a maverick. You can't be difficult to work with. It's a very collaborative, network-oriented way of investing. Now, there are many benefits that these investors bring to the companies and the entrepreneurs they back, but it also has to be delivered in a spirit that is pro-entrepreneur. Most of these investors put a lot of their time and energy into being mentors and coaches. They have a compassion for the entrepreneurs. They want to help them succeed. They're also good judges of people. They are critical. They do judge, and they choose who they're going to spend their time with, which entrepreneurs, which teams, and they know how to help those teams flourish and grow. Now, beyond that, as we'll talk about on the entrepreneur page, great early stage technology investors have a deep interest in the future. They are constantly looking for emerging trends and the tailwinds that will make their investments succeed. And that intellectual curiosity is a passion. They spend their time reading and thinking and talking to people and tracking how our world is changing. And then point number 6, they don't always go with the flow. Sometimes their views are criticized, are different, make them look like a maverick. They have a different point of view, and they find entrepreneurs that agree, and together they back and form and grow companies that are going against the grain, but nonetheless fueled by a vision of the future and by the tailwinds that they've spotted. Now, the rest of these points are more conventional, and I won't go through them. It is important to have a disciplined approach. We've talked and written about this in other books, and most of these investors emphasize these points too. And clearly, you have to have both the resources, the time and energy, and the mindset to take on a great deal of risk and potentially lose a lot of money along the way before you hit the big wins that are part of a diversified portfolio of companies. That patience and perseverance is important, not least because the losing companies show up first. Typically, the failures occur in years 2, 3, and 4, and the winners take much longer to surface, often 5, 7, or even 10 and more years. So that perseverance and personal resilience is extremely important too. Now, I know I haven't done justice on this page to the depth that you will experience if you read the 50 points of view of these remarkable people. There's a lot more nuance, there's a lot more wisdom in the book than I can condense down to one page. That's even more true on the entrepreneurial dimension. But if you are an entrepreneur, and if you're setting out, or perhaps you're a serial entrepreneur trying to do a better job this time around, we think that this book has a lot for you too. Not least because you will learn in detail the perspectives, motivations, and rationale for investing of 50 Silicon Valley angels and VCs. And certainly if you're planning to pitch any of them, you should read the book and learn about them first. Once again, the human dimensions rises to the top. Great early stage technology entrepreneurs have something that is very hard to analyze, but absolutely critical. They have a grit and a determination to succeed, which most people simply don't have. One of our contributors is Finnish, and she describes it by the Finnish word sisu, the ability to forge ahead in adversity against impossible odds. It's more than just being stubborn, it's actually constructively moving through barriers and never taking no for an answer. But doing that at the same time as you are building a team, attracting the best and complementary people, and leveraging a great network, which includes your investor community, your employees, of course, and other experts. Great technology entrepreneurs are not loners. They're not doing it by themselves, especially with the technologies that are being unleashed today and the global opportunities that they represent. I think a theme that has emerged in the last few years, and perhaps if we'd written this book a few years, 10 years perhaps ago, we would have heard less about it, is also the need for these entrepreneurs to have a level of humility and coachability and self-awareness that is very important in this time frame. It's summarized as having good EQ, emotional quotient. But certainly some of the largest flameouts of the last few years have been where early stage technology entrepreneurs were too egotistical, were not listening to good and timely feedback, and were simply doing things that they shouldn't have done. And so we think that this is a good point and one that is worthy of elevating on this list. Again, I won't go through all of the rest of the points, but these entrepreneurs are not just about building products and services and companies. They're about changing the world. Most of them have a bold vision. They understand how the world is, and they understand what they're trying to change about it. And they have a burning obsession for that. And they are very good at communicating it. It's one of the things that early stage investors always remark upon. The best early stage entrepreneurs get your attention in a matter of a minute or so. They tell you their story, they tell you about the company, and they do it in an inspiring way that makes you as an investor sit up and take notice. And that is a skill which many people do not have, but most of the great technology entrepreneurs have it. And then you can read these other points. They are somewhat aligned with the same points as I mentioned regarding early stage investors: adaptability, flexibility, curiosity, and resilience. So these are just examples. This is in no ways a good way to try and summarize a 300-page book with 55 people telling their stories against 20 questions. But it gives you a sense of the types of takeaways you'll get, recognizing that different contributors don't always agree. Different members of this book, of this contributor group, have different points of view about the best ways of going about early stage technology investing. So to summarize, we wrote this book because we love The Intelligent Investor and Benjamin Graham, but we think his work is almost irrelevant to Silicon Valley early stage technology investing. It needs to be complemented by something different. We looked at all of the other books that have been written on early stage angel and venture capital investing. We think many of them are very good, but they tend to be one voice of one individual who oftentimes is not a successful investor, giving you their perspective on what's happening. And so we decided to do something very different. We decided to create an empirical collection of the voices and wisdom of the most remarkable people we know here in Silicon Valley. Venture capitalists, angel investors, people that run incubators and accelerators, and service providers to the ecosystem, all in a single book, which provides, we think, more diversity of voices and more, in sum, wisdom than any other book that exists on this topic at this time. It's available everywhere in hardback, paperback, and ebook. We hope that you'll take the time to get yourself a copy. Maybe if you enjoy it, leave us a review and share it with your friends. But most importantly, we think that early stage technology is something that everyone should be thinking about. And one of the, in fact, on this cover, in the top right-hand corner, Victoria Pettibone of Astia says it very well. Investing in early stage technology is building the future that you want to live in. And we think that's a worthwhile mission for each of us, especially those of us that have the resources to participate. So thank you very much for joining us. Please, as always, don't hesitate to contact us if you have additional questions. And with that, I will bring this webinar to a close.